Hi everyone, Happy New Year. It's been a long time since I checked in with you. We've got a lot to talk about, so let's get started. I wanted to take the next 4 minutes and talk about four things that we are looking at very closely with respect to economics, financial markets going forward into 2022. Number one, let's get the obvious right out of the way, and that is COVID-19, in particular, the Omicron variant. Now, this is something that I would have thought after 85% of the Canadian public getting fully vaccinated that this would be something in our rearview mirror. Clearly, it is not. The Omicron wave continues to affect our daily life. Now, the good news about this, if there is any good news, is that the Omicron variant is going to have significantly less effect on the global economy than previous variants. There's a number of reasons why, but Omicron seems to be less severe. I think it will move through our system faster. Other than the absenteeism that people are experiencing right now because of having to take time off work, which will have a negative effect on productivity, I think the global economy is going to be able to weather this variant better than in the past, and that's good news. Number two, 2022 is the year that we move from rapid reopening to normalization. Now, typically, I would not bore you guys with talking about normal because normal is boring. But in this case, I don't know about you, but I crave normal. I crave going back to life as normal. And the good news is we're going to get there. It's going to take a little bit more time, but towards the end of 2022, our lives, our work schedules are going to get back to what more of a normalized system, more looking like 2018, 2019 before COVID-19 became a reality in our life. Number three, inflation. This is something that everybody is talking about. However, not all people are talking about what exactly inflation is. Inflation is a phenomenon in the economy when you have lots of dollars chasing very few goods or things that we want to buy. Over the last 3 years, governments around the world have flooded the economy with money. Supports to help small businesses or individuals whose work has been affected by COVID. So there's lots of money in the system. And then supply chains have been bottlenecked, and there's fewer and fewer goods that we want to buy in the system. So then you have a lot of dollars chasing very few goods, and thus you have price inflation going up. Now, the good news is that inflation is going to subside. It's going to come back down to normal. There's that word again. Towards the second half of this year. And there's three reasons why. Number one, supply chains are going to get caught up. It's going to take a few more months, but eventually they're going to get there. Number two, interest rates are going to start rising, and we'll talk about that next. Number three is the buying habits of consumers is going to shift somewhere probably near middle of this year. As of right now, consumers are spending almost all of their money on goods, on things that we buy, things that we can hold. They're spending very little money on services, things like restaurants, concert tickets, travel. And I think towards the second half of this year, consumers are going to be able to spend more money on those service type things. That's going to provide a little bit of a relief on the inflation on the good side of the equation. I think that is a good news story. It's just going to take a little bit of time for us to get there. Now, I talked about this earlier, but this is number four. Interest rates are going to begin going up. Now, interest rates go up to help bring down inflation. So the cost of borrowing is going to go up, and that's going to have a dampening effect on inflation, which is good. The flip side is it's not that great if you have a floating rate mortgage or if you have a home line of credit that is on a floating rate, and that you're going to be paying a little bit more when it comes to servicing those interest costs. I don't think interest rates are going to go up significantly, but I think we're going to start seeing that tick up over the course of 2022 and going into 2023. Now, what does all this mean? What does all this mean to you? What does all this mean to you as an investor? That's the most important thing. I think 2022 is going to be a reasonably good year. Other than inflation, all the other metrics that we look at to try and predict global economies and financial markets look pretty positive. Corporate earnings still look good. Interest rates, again, are still relatively low. And unemployment numbers look very good in the economy. So I think it's going to be an optimistic year. We're going to have to expect more volatility than we got in 2021, but as an investor, that comes with the territory. So this is a good news story. I think 2022 is going to be reasonably optimistic. Now, who out there doesn't want to hear good news? So I would suggest you take this video, forward this to a friend, a family member, a coworker who you think needs to hear 4 minutes worth of good news. I will be in front of your computer next week with my next video, which is called 2022, Let's Get Organized. I look forward to seeing you then. Stay safe, everyone.